Okay, good morning. Today we're going to finish up Chapter 12. Chapter 12 is about the statement of cash flows. I have a question on learning catalytics, so I wanted to talk about, kind of review what we did yesterday or Monday, and then go forward with the new stuff today. So when we do a statement of cash flows, there's three types of cash flows on the statement. There's operating, investing, and financing. And those three categories of cash flows are on every statement of cash flows, and they're in that order: operating, investing, and financing. When we have on the balance sheet, our operating cash flows come from changes in current assets and changes in current liabilities. And we're going to do one of these today, so you're going to see how that works. But basically what we do using the indirect method is we start with net income and then make a series of adjustments to net income to make it a cash basis operating cash flows. So current assets, current liabilities, things that impact those are in effect on the statement of cash flows under operating cash flows. Long-term assets. So when you're talking about property, plant, and equipment, you're talking about equipment, about land, about buildings, about stock we've purchased in another company that we're going to hold indefinitely. That's all considered investing cash flows. And then we get to our final category, financing cash flows. Financing cash flows come from activity with long-term liabilities, like bonds payable, long-term loans, and stockholders' equity transactions. So this is where you see transactions with issuing stock, with buying our own stock back, like treasury stock. Any transaction to do with a long-term liability, with common stock, with treasury stock, are all going to be considered financing cash flows. So that's kind of an overview where we were yesterday. So we have this question out there: purchase of treasury stock is reported on the statement of cash flows as what type of cash flow? And wow, and a lot of you have it right already, so that's great. Again, we're looking at what type of, where would treasury stock go on the balance sheet is the question. So looking back here, treasury stock is part of stockholders' equity. It's a contra stockholders' equity account, but it's stockholders' equity. And we see there that stockholders' equity, any cash flows with that are financing cash flows. So when we're looking at this, purchasing treasury stock, good. The answers are getting better all the time, but this is going to be a financing activity because treasury stock is stockholders' equity. Now, I'm going to leave this question open for a couple minutes or so, and I'm not going to announce when it's closed. So if you're just getting here, you have a couple minutes, minute or two, to get it answered. I'm not going to announce when it closes. Okay, but make sure you've answered it. Okay, so some review here, some administrative announcements again. Exam 3, the final exam, chapters 9 through 13. It is Monday, December 14th, 8 a.m. through Thursday, December 17th, start by 4 p.m. Okay, if you are in sections 1 or 2, so you take your exam in the computer lab, the computer lab is worried about long lines, so they're opening up a special time to take the final exam. So this is sections 1 and 2 only. The computer lab will be open on Sunday before finals week. So from Sunday to from 12 to 6, you can take your exam. And if you have the time and you're in sections 1 or 2, this would be a good time to take it. I can virtually guarantee, once I say this, this won't come true. I can almost guarantee there will not be lines on Sunday. It'll be a pretty laid-back day, 12 to 6. You would need to start it by 4 p.m. to be allowed to take it. They don't let people start exams after 4 p.m. But you could take it Sunday. They have special hours. And again, that's for sections 1 and 2, just because we're worried about long lines in the computer lab towards the end of finals week. So they opened up this capacity. They don't have the ability to stay open any later, but they opened on Sunday. So if you're in sections 1 or 2, I'll be emailing you out about this if you're in sections 1 or 2. Also, if you're in sections 7 and 8, remember you can take it any time from 8 a.m. Monday until Thursday at 4 p.m. Schedule at least 72 hours in advance. Again, ProctorU, this is their busy time too. The sooner you get registered, the better. I emailed you yesterday a reminder about this. If you could just jump on and schedule your exam, that would be great, because then you're going to get the time slot that you want. Okay, we have Chapter 12 homework due this weekend. Okay, extra credit project. Again, keep beating the same drum here. It's due Saturday, December 12th. You don't want to wait until then to do it. You have to complete all 10 steps with a score of at least 80% on each step. And I have seen a couple people skip a step but get 100% on everything else. That's not going to get you the extra credit. You have to do all the steps. There is no partial credit. You either complete all 10 steps or not. So you're going to get the 2% or not. And the extra credit project score. So right now, the extra credit lives in the homework score. So if you open up the extra credit and you start working on it, it's going to have impact on your homework score and on your overall grade. I can't do anything about that. If it's available, it's going to impact your homework score. But this homework project is due Saturday, December 12th, 11 p.m. I mean, it just cuts off. There's no other way, no other time to do it. So after that, Sunday or Monday after that, I will remove it from the homework. So it will no longer impact your homework score. So know that if you did start it and you didn't finish it, or you have 100% on all the other homeworks and you have 90% on this one, it's going to come out. I should also tell you that if you've missed some homeworks and you haven't done so well on the other homeworks and you have 100% on this, it's helping your score out, but I'm going to bring it out. I'm going to pull it out. Whatever impact that is, this extra credit project is coming out on December 13th. It will no longer impact your grades. I can't do anything about it right now. To have it available, it's there in your homework, but it is coming out. If you have any questions about the extra credit project, what you need to do is you need to email me. You need to email me 2 things. First of all, in the memo line, in the subject line, put extra credit step, whatever step you're on, step 2, step 5, whatever step you're on. And then in the body of the email, tell me what you're having trouble with and send me a screenshot from what you're seeing, because then we can help you. And most likely it'll be a mirror emailing you back, but send those emails to me. And so if you have trouble, don't hesitate to email. We'll get back to you. But this is a really good way to boost your score. So that's 2 points to your final overall grade. Okay, so back to Chapter 12. So Chapter 12, I'm going to start with 3 slides from Monday. So these are exactly the same as Monday. I just want to reiterate them and get them front and center because we're going to have to do these things today. So there are 3 types of cash flows in the statement of cash flows. There's operating cash flows. Operating cash flows are our most important cash flows when we're evaluating a business because they're what the business is in business to do. Operating cash flows, we are only doing the indirect method, which means we start with net income and then we add a whole bunch of adjustments or make a whole bunch of adjustments. And what we're trying to do is we're trying to convert our net income to a cash basis. So net income, we use accrual accounting so that we can reflect revenues and expenses in the period in which they're incurred. But then we need to take that net income and convert it back to a cash basis. So that's what all these adjustments are. This particular list of operating cash flows, I know this is not intuitive. You look at it and you think, why am I adding depreciation or why am I adding a loss on sale? And it all seems backwards. If you're an accounting major, you'll get this and you'll know it inside and out by the time you take the CPA exam. But for the meantime, for the rest of everyone, for the vast majority of you. You're not accounting majors, and it is confusing at first. This list of operating cash flows is on your exam reference sheet, so you don't have to memorize this list. So if you get a question that says, what do you do, what kind of cash flow is a gain on sale of long-term assets, you can see on here it says subtract. That's the minus sign. It's an operating cash flow. So this list you don't need to worry about memorizing. You will need to know what investing cash flows and what financing cash flows are. So I'm not going to give you the whole statement, but I'm giving you this chunk on the exam reference sheet. Okay, and then investing activities, we've talked about these on Monday. Investing activities are anything to do with long-term assets. So this is buying a building, selling a building, buying an investment like buying stock in another company or selling stock in another company, buying land, selling land. Those are all investing activities. So if there's an underlying long-term asset, that's an investing activity. Okay, then we have financing activities. Financing activities are anything to do with liabilities, long-term liabilities, and stockholders' equity. So we'll see issuing stock. We'll see selling treasury stock. We'll see borrowing money. Those are all inflows, cash flows related to financing. And then the deductions for financing are things like buying treasury stock, repaying principal on long-term borrowing, payment of dividends. Okay, so financing activities have to do with long-term liabilities and stockholders' equity. Okay, and again, I just want to point this out again because I think it's one of the nicest graphics showing this. This is a balance sheet, okay? The balance sheet, the assets are on the left, liabilities and equity are on the right, and current assets and current liabilities impact operating cash flow. Our investing activities are long-term assets, and then long-term liabilities and stockholders' equity are financing cash flows. Okay, so now we will have, we're going to do another question. Okay, paying bonds payable. Assume that bonds payable is long-term. So when you're answering this question, paying bonds payable is reported on the statement of cash flow as what type of activity? Operating, investing, or financing? Okay, when you're answering this question, let's go back to here. Our question is about we're making payments on bonds payable. Bonds payable is a long-term liability. So when we look at here, we see long-term liabilities. Bonds payable are a long-term liability. That long-term liability, we see that anything to do with long-term liabilities or stockholders' equity has to be a financing cash flow. Okay, so again, looking at our underlying activity, what is this? This is bonds payable. Whether we're issuing a bonds payable or we're paying it off, whatever it is, it's bonds payable. Bonds payable is a long-term liability. It means it has to be a financing cash flow. So I'm going to close this question in about 10 seconds. Again, a bonds payable is a long-term liability. Final 5 seconds to get your answer in. And that is a financing activity because the underlying activity is a long-term liability. Anything to do with long-term liabilities or stockholders' equity is going to be a financing cash flow. So the three cash flows, you need to know them. You need to know them in order. They're operating, investing, and financing. Operating are the most important cash flows when we're evaluating a business. Operating says, are we generating cash from our business activities? Investing activities have to do with our long-term assets, so that's property, plant, and equipment. It's going to be our long-term investments. So those are investing activities. Financing activities, again, are long-term liabilities and equity. So operating activities, operating cash flows are that single biggest, most important cash flow when we're evaluating the business. Towards the end of class today, we're going to look at two businesses and look at their cash flows because this is an interesting statement. Okay, this is a note. This is Exhibit 1210. Just basically, everything that we've looked at so far, we bought land with cash. We've sold a building for cash. Once in a while, we have transactions that say we bought land by taking out a long-term loan. That transaction did not impact cash, but it's an important cash transaction nonetheless. The thing that you need to know is some of these items, non-cash investing and financing activities, even though cash is not involved, they're reported at the bottom of the statement, kind of like a footnote. We're not going to do them specifically, but here, if we bought a building by issuing common stock, there is no cash. That's not investing or financing because there is no cash involved, but it goes in kind of a disclosure part of the statement at the bottom. Acquisition of land by issuing a note payable, so we borrowed money to buy land, no cash involved. Payment of long-term debt by issuing common stock, so we had something, we had a long-term debt and we issued cash to settle it. We issued stock to settle it. There's no cash there. So those are examples of non-cash transactions. And we're not going to do a statement that includes these. I just want to make a note that if there's no cash involved, it's not technically operating, investing, or financing. It's a non-cash item. Okay, so brings us to our next question. The best gauge of a company's ability to produce ample cash to continue as a going concern is net cash provided by what? Okay. So here we're looking, again, another way to paraphrase this is to say, what's the most important cash flow? This is saying a going concern means our business is going to exist in the foreseeable future. That's what going concern means. So which cash flow is most important in evaluating that ability to exist into the foreseeable future? Okay. Again, and another way you can just simply say, what's the most important cash flow to evaluate out of all of them? Okay, most important cash flow. In your notes from Monday, we would have talked about this as well. So I'm asking the same thing, just a different way. Which set of cash flows is most important in evaluating that business? So, and this happens to be phrased, the best gauge of a company's ability to produce ample cash to continue as a going concern, meaning our business is not going to go out of business in the foreseeable future. But another way to ask this question and come up with the same answer is, what is the most important cash flows to evaluate? Okay. Okay, we're going to close it in about 10 seconds, so get your answer in. Okay, again, operating cash flows, over and over and over. Operating cash flows are the most important barometer of how we're doing. How is our business doing? Are we generating operating cash flow? Are we generating cash from our operations? That's the best indicator that we'll be able to continue indefinitely. Okay, now, this one, I'm going to go ahead and put this one out there. Okay, depreciation expense. Now I'll give you a hint on this one. This depreciation expense is one of the adjustments to reconcile net income. Okay, so depreciation expense is one of the adjustments to reconcile net income. Where would that be found? So you're looking for, when you're looking at your notes, you're looking for the term depreciation expense. It's in there somewhere. It can be abbreviated, DEPREC expense, perhaps. Here's your freebie for the day, if you don't have it already. Depreciation expense is one of the items on that list of operating cash flows that I said I was going to give you on the exam, so that we start with net income and then we have a series of adjustments to reconcile net income. The first item is always adding back depreciation expense. So depreciation expense impacts operating cash flows. So I'm going to close this question in 5 seconds. Okay, next one, sale of equipment. Okay, so sale of equipment is reported on the statement of cash flows as what? Operating, investing, or financing. And again, that goes back to those slides. It goes back to the balance sheet. What type of account is equipment? So what kind of cash flow will it be? Again, so the slide, the notes you took on Monday, where we had, or when we started out today, where we said here's our operating cash flows have to do with current assets and current liabilities. Investing cash flows have to do with any long-term assets. Financing cash flows have to do with anything with long-term liabilities or equity. Okay, so on this question here, you're asking where on the balance sheet would equipment be? So where would equipment be on the balance sheet? Okay, if it's a current asset or current liabilities, you're going to pick operating. If it's a long-term asset, you pick investing. If it's a long-term liability or stockholders' equity, you would pick financing. I'm going to close this in about 10 seconds. Okay, again, these questions can be answered from the notes that you take in class, or if you don't want to write everything down from class, you can download the PowerPoints, but these are things that are right in the notes. So, again, one last chance because we've got equipment. I'll give you a hint, and we're going to close this fairly soon. Equipment is a long-term asset. It's part of property, plant, and equipment. It's a long-term asset. So I'm going to close this about 10 seconds. Okay, that is an investing activity. Okay. Okay, let's see what's the next one. Okay, now we have one. So investing activities, we just said investing activities are anything to do with long-term assets. Long-term assets are equipment, land, buildings. Those are long-term assets. So those are investing activities. So now we have this question. We have a company that sold land for $150,000 cash, purchased equipment for $30,000 cash, and issued bonds for $100,000 cash. So before I have not put this question out yet, but I want to set you up for it. So the question is asking investing activities. So right then, that should set off warning bells here. Investing activities are anything to do with long-term assets. So long-term assets are things like land, buildings, equipment. Okay? So looking through this list. Then I see issuing bonds. If we issue bonds, that is a long-term liability. Issuing bonds is a long-term liability, and that would be a financing activity. So this question is asking only about investing activities. So you actually have to do a little bit of math here. You're going to have to think about whether cash is coming in or going out. So this question, okay, so you have to do a little addition or subtraction. Okay, most people have answered now. Just want to talk about this. So when you're considering your answer, we sold land for $150,000 cash. So you sold land for cash. So that means we have $150,000 coming in. So we have $150,000 increase. So we'll put a plus $150,000 off to the side. The next item down, purchased equipment for $30,000 cash. So I purchased equipment, meaning I spent cash. So we're going to have a negative $30,000. So far we have plus $150,000 minus $30,000. Okay, so we have two numbers so far. Plus $150 minus $30. The next number given, issued bonds for $100,000 cash. Issued bonds is a long-term liability. It's a financing activity. It would not be part of this question at all. So we end up for this question having 150 plus minus 30. Okay, so 150 plus minus 30 gives us the 120. And so I'm going to close the question in about 10 seconds. So that is the 120. You have the 150 minus the 30. Okay, so now we're going to do two homework problems. Okay, so the first one, we're going to do the operating activity section. So we're actually going to assemble the operating activity section of a statement of cash flows. A statement of cash flows has three sections: operating, investing, and financing. We're going to do just the operating. We are only doing the first three learning objectives in this chapter, so we're only doing the indirect method of operating cash flows. The fourth learning objective in the chapter we're not covering. That's the direct method of statement of cash flows. So we're going to prepare the operating activity section of the statement of cash flows. So what we're given is we're given a table of data. And the very first thing in the table says net income, and there's a big question mark there. That means, so when we do the operating section of statement of cash flows, that's the section that I'm giving you on the exam reference sheet. And what it does, it has a very standard format. It's just given to you. It says, here's what you do. You start with net income, and then you add or subtract the adjustments, and that's what we're doing here. So I am imagining in my head that I have that list of adjustments or that list of the operating section next to me. So you would have that next to you. If you're an accounting major, 2 years from now, you'll know it by heart, but we've got it next to us, so I'm just going to walk through that here. So the very first thing on that list of adjustments is net income, but we're given a big question mark instead. So that tells us we need to calculate net income. So to calculate net income, what I'm going to do is I'm going to go through the list of items and pick out everything that impacts net income. So the first thing I see is I see sales revenue. Net income is revenues minus expenses, right? So we're going to take sales revenue. I'm going to subtract cost of goods sold. I'm going to subtract other operating expenses. And I'm going to subtract depreciation expense. So going through that list, that was every single item that would show up on the income statement. So when I calculate net income, I'm going to be taking $376,000 revenue minus cost of goods sold of $198,000 minus operating expenses of $64,000 minus depreciation expense of $12,000, giving me $102,000. So when you do this homework problem, the very first thing you need to do is calculate net income by picking out the revenues and expenses, and that's what we did here, okay? So now I'm imagining that I have that list of adjustments for the statement for the operating section, the part that I'm going to give you on the exam reference sheet and that we went over on Monday. So what I'm going to do now is I'm going to switch to, I'm going to select all the items in the operating activity section. So right now, all I'm doing is circling things in the table. Okay, let me go back. Okay, so I calculated net income. My next step is to say I'm going to assemble the statement. So what I'm going to do, I can't assemble the statement on the screen because I don't have enough room. But what I want to do is I'm going to go through the table and I'm going to circle everything that would be in the operating activity section from the table. There are things in the table we don't need. Okay, so the first thing I need net income, and I said it was $102,000. We just did that calculation. Okay, so the next item down, we're talking about operating activities. So when I go through the list, payment of dividends, that's a financing activity. I don't need it. Proceeds from the issuance of common stock, I don't need it. That's a financing activity. Sales revenue, I don't need it because that was in the net income I used already. Increase in current assets other than cash, $63,000. That's one of the adjustments. Okay, so I'm going to use that. Purchase of treasury stock is not an item. Cost of goods sold is not an operating item. Other operating expenses, I reused it. Purchase of equipment with cash is not because it's investing. Increase in current liabilities is one of the adjustments, and so is depreciation expense. So all I'm doing is I'm looking down through the list of adjustments that was on the list that we went through on Monday. So I'm picking out these 4 items. Those are the only items that are going to be on our operating cash flows section of the statement of cash flows for this exercise. So when you tackle this exercise, you need to pick out the items you need. You do not need every item. Okay, now I've circled everything. I've showed you what we're going to do, and now I'm going to go to do the statement, but I have to leave this page. So these numbers are going to disappear, but these are the numbers that I'm using for the operating section of the statement of cash flows. So first thing, cash flows from operating activities. So we're doing a partial statement of cash flows. Statement of cash flows is operating, investing, financing activities. We are doing only operating right here. So we'll start with net income. We're going to have a series of adjustments to that. And this is where that section that I gave you on Monday, that I'm giving you on the exam reference sheet. The adjustments to reconcile net income, the first one is always add back depreciation. And I know I added back because there's a plus sign in front of it on that sheet. I'm going to subtract my increase in current assets other than cash. Again, that's on that sheet. It tells me increase in current assets decreases. My increase in current liabilities, I'm going to add it back. Again, refer to that reference sheet. Do not try to memorize it at this point. Just refer to the reference sheet and locate increase in current assets. It'll tell you to subtract it. The increase in current liabilities, it'll tell you to add it, and that's all we're doing here. So what I've done is I've taken the $12,000 depreciation expense, the minus $63,000, and the $20,100. I've added that together, and I get minus $30,900. And at that point, there would typically be a line between, I'm not sure where it went, there's a line between the 30,900 and the 71,100. Okay, so again, the 30,900 is the depreciation, the 12,000 minus 63,000 plus 20,100. And then I got the 71,100 by taking the 102,000 net income, subtracting the net adjustments of 30,900, and that's where I got the 71,100. And there's typically going to be a single underline right above that net cash provided by. If that net cash provided by operating activities were a minus, like a negative, that would be net cash used by. So cash can be provided by or used by. Used by means it's negative. Provided by means it's positive. Okay, now, so this is the operating cash flows section of the statement of cash flows. So this is that one little section of the statement of cash flows. Remember that the operating cash flows are the most important cash flows when we're evaluating a business. This business had cash provided, net cash provided by, so that means it is generating cash from its operating activities, which is a good thing. Now we're proceeding on to exercise 12.8. 12.8 is related to this one. 12.8 says, okay, using that same set of data here in class, we're going to take our operating cash flows, and now we're going to take that and we're going to do the entire statement. So we have our same data set here in class. When you do it in My Accounting Lab, it'll be a different data set, but you'll be given the operating cash flows for this one. So we're going to start with, here's our statement of cash flows. We're starting with the operating activities. We're starting with net cash provided by operating activities, the 71,000. But now we're proceeding on to do the investing activities and the financing activities. So we've done the operating, now we're doing the investing. And when we go through the table, we're looking for anything to do with long-term assets. So long-term assets are property, things like land, buildings, equipment, long-term investments. And I look through the table and I see, first of all, purchase of equipment with cash. If I purchased equipment, I'm giving out cash, so it's a negative 37,000. The next item down in the table that I see related to investing activities, proceeds from sale of land, 28,000, and that's positive. I've sold land, so I'm getting cash in. So in total, then, my net cash used for investing activities, see how I'm saying used for because it's negative? I purchased equipment for 37,000, so that's negative. I sold land. I had 28,000 coming in, so I have a net negative 9,000. So net cash used for investing activities here. Okay, so there's our investing section. So far we've done the operating section, now we've done the investing section, now we're doing the financing section, which is the last section of the statement of cash flows. So, doing the cash flows for financing activities, going through the table, the first thing I see, remember all financing activities have to do with long-term liabilities, which are things like bonds payable, and all stockholders' equity things, which are things like issuing stock, buying back our own stock, paying dividends. So going through the table, we see we have issuing common stock proceeds. That's a positive because we issued stock, someone's giving us cash, so cash is going up. Next item down, we purchased equipment. I have the wrong circle here. Yeah, you're nodding at me, right? Okay. There's two $37,000 here, so I circled the wrong one going through there. Okay, so payment of note payable. It tells us in the table note payable. Well, note payable, we assume it's a long-term liability. And so payment of note payable, $37,000. It's a negative because we're paying it. Okay? So we have a cash outflow. Next item down, payment of dividends. If we paid dividends, we're paying cash out, so it's a negative. Purchase of treasury stock, we're buying our own stock back, so it would be $8,000 going out. So in the end, we're going to add up those items and we end up with net cash used for financing activities. So what we've done in exercise 12.7 is we did the operating section of statement of cash flows. In this one, we did the investing section and then the financing section. So basically investing, we're looking for anything to do with long-term assets. In financing, we're looking for anything to do with long-term liabilities and stockholders' equity. Okay, so now we put it all together. And what we end up with is a statement of cash flows. The first part came from exercise 12.7. You don't need to write this down because you've got everything in your notes except for one little piece. So this first part is the operating statement, the operating section we did in 12.7. Then the second section is investing activities, which we just did. And then the third section is the financing activities that we just did. So the only part that we have not yet done is the very bottom line, and this is where we take the $71,100, the operating cash flow, and we subtract the net cash used for investing, we subtract the net cash used for financing, and we end up with our net increase in cash of $34,700. So we're going to add those three numbers, the operating, the investing, and the financing together to get our net increase in cash. And once in a while, on the homework, it'll give you a beginning cash balance. You would take that beginning cash balance, add the increase, and come up with the ending cash balance. But this is the net increase in cash provided by activities this time. Your homework this week is fairly short. It'll take a little bit of time to go through it because it's unfamiliar. But you have exercise 12.7 and 12.8, which we just did, and then there's one other short exercise on the operating section as well. So it's these two and then one other one. I emailed out the step-by-step videos yesterday for that other one. So now where we go is I want to look at a couple real statement of cash flows. This is where you don't need to memorize this or anything. But the first one we're looking at is Angie's List. And I just threw the whole statement up here, little tiny numbers and everything. But this is Angie's List, the referral service for finding service providers. And when we look at Angie's List, what I'm doing here is the statement is quite lengthy, right? So I'm going to take each section. So the first section is operating activities. And when we look at Angie's List operating activities, the very first thing they start with is net loss. Angie's List doesn't make money at this point. Angie's List, surprisingly, has been in business for 20 or 30 years, which I was surprised by, but it's been in business. It has a net loss. Every year that's shown, 2012, 2013, 2014, have net losses. I guess it's less net loss in 2014. And then we have all these adjustments to reconcile net loss. So this is doing exactly what we said, and down at the bottom line where I've circled it at the bottom, we see that in 2012 they used cash for operating activities. 2013 they were able to generate some cash, and in 2014 they actually have positive cash generated from activities. Pretty small, but it's positive, so that's a good thing. Switching on to investing activities, we look at Angie's List. They had net cash used in investing activities. It looks like, just scanning their list, they bought property, plant, equipment, and software. they developed their website, they purchased investments. So they're using cash. And then their financing section, we look at this, they made payments on long-term debt. They got proceeds from issuing long-term debt. So they weren't issuing stock, they were issuing long-term debt. So what I did here is I put all the bottom line numbers in a table. So 2012, 2013, and 2014. We have operating, investing, and financing cash flows. So in operating cash flows, Angie's List has managed to generate some cash flows from operating. So that's good. But what's alarming here is investing cash flows. They keep investing more and more in their business, which you think they would have to. But financing, they're using financing to survive, basically. So Angie's List is an interesting thing. Angie's List has taken a big hit in their stock price over the year because investors are starting to get really nervous about Angie's List because Amazon's starting to move into this space. Now Amazon is offering home services. Depending on where you live, you can go in and find a service provider for cleaning or for repairs, etc. So Angie's List, looking at their statement of cash flows, this would not give me a lot of comfort. They're generating a little bit from operations finally, but they're heavy, heavy into financing. And as an investor, if you're looking to invest in stock, know that all those people that loaned money to Angie's List get paid before you do if Angie's List goes bankrupt. So it's a pretty risky investment at this point. Okay, so then on to Apple. Apple is the king of cash. So we look at Apple. This is their statement of cash flows, and I blew it up the part, and we have cash generated by operating activities. Apple this latest year had $59.7 billion generated from operating activities. So what it's in business to do is generating cash hand over fist. Cash used in investing activities, those are all negative, and that's a normal, healthy business. Apple is generating tons of cash and is taking that cash and reinvesting it. So we see that what Apple's doing with its money, the biggest thing across the top, purchases of marketable securities. So Apple has all this cash. What is it doing with it? It's buying marketable securities for the most part. It's got a lot of other activities in there too. But it's holding the cash as it makes investments in the future too. And then we look at the financing. It used cash for financing. What did it do with financing? It did two big things with financing. It paid dividends, and it repurchased common stock. So Apple's out there buying its own stock back. It's buying its own stock back for employee stock ownership programs. It's also probably buying its own stock back to buoy up the price of Apple stock. Okay, so Apple, very healthy company. You see cash being used for investing and financing activities, and they're generating tons of cash. Right now, I think Apple has more cash than any other company in the world. It just has an amazing amount of cash. So, on to another question now. Okay, so we've talked about the statement of cash flows. We've talked about what it is, the statement of cash flows. So if we look at this, what will not be on the statement of cash flows? So early returns are really good on this one. Okay, so I'm going to start at the bottom and work my way up. The sources of cash in the current period, answer D. That is absolutely on the statement of cash flows. The statement of cash flows will show you where the cash came from in the current period. Looking at answer C, changes in the cash balance for the current period. Yes, it will absolutely show you the changes in cash balance in the current period, so it can't be C. How cash was used in the current period? Yes, that is the purpose of the statement of cash flows, to show you how it was used. So then it gives us to the first answer, A, the number of checks not written at the end of the period. What is that number? I don't know. It's an infinite number. Well, what checks weren't written? I don't know. So answer A is kind of a nonsense answer, so that would be the answer here. I'm going to close it in about 10 seconds. Get your answer in. Running out of time here. Okay, so again, that number of checks not written at the end of the period, that was the nonsense answer. Okay, now, before I send this one out to you, I want to say on this one, when you read this one, read it closely. The statement of cash flows classifies cash receipts and payments. So what it's asking you in this question is, what are the three types of activities on the statement of cash flows? So it's saying true or false. The statement of cash flows classifies cash receipts and payments as operating, non-operating, and financial activities. Is that true or false? So we've been doing those three types of activities all day today. Okay, what are the three types of activities on the statement of cash flows? I'm going to close this in about 10 seconds. Okay, it is false because we talked about the operating, investing, and financing cash flows. Those are the three types of cash flows that we've been looking at. Okay, now this one, again, I'm going to wait to push it out because I'm going to talk about this question first. Operating income is typically equal to cash flow from operating activities. What this question is asking you is, on that operating activities list of adjustments, we start with net income, and then we have a bunch of adjustments to net income. Net income is, for our purposes, let's just say it's equivalent to operating income. So for this question, you can read it as net income is typically equal to cash flows from operating activities. So this question is asking you, on the list of adjustments, that operating activities where we start with net income and we have a list of adjustments to reconcile net income where we add back depreciation, we subtract a gain, we add back loss, all those adjustments. It's asking you, is net income typically equal to the cash provided by operating activities? So it's asking you, is the top number in that section equal to the bottom number after you've made all the adjustments? Okay, so the question's out there now. Okay, this question that's still out there, what I'm asking you here is this net income number up here at the very top where it says net income. We can assume that's close enough to operating income for our question here. Is net income, you know how for the operating section, we take net income and then we add and subtract all these adjustments. So this question is asking, is this number here equal to this bottom line here? Will those be the same? And I can tell you, looking at this, the chances of them being the same is astronomically small, right? Because we're taking net income's on an accrual basis, and we're making all these adjustments to adjust it to what it would have been on a cash basis. Those two numbers are not going to be the same, and that's what's being asked in that question. So I'm going to close it in about 10 seconds. So get your answers in there. Okay, and of course that is false, again, because we're doing the whole thing, going from net income down, all these adjustments to get this cash flow from operating activities. Those two things are not going to be the same because you make all these adjustments. Your objective in making the adjustments is to convert an accrual basis, net income or operating income, to a cash flow basis. They are not going to be the same number. Okay, so that one would be false. Okay, so that brings me to the end of this chapter. This chapter will not be too bad. Take a little bit of time with the homework, but there's only the 3 homework problems. The practice exam is going to become available soon. So if you'd like to get started on that, it should pop up in the next few days. And the final exam will be, we'll talk more on Monday, but the final exam will be similar to the last 2 exams. The final exam is over chapters 9 through 13. It is not cumulative, and we'll talk more on Monday and Wednesday what to expect for the final and what to expect during finals week. Okay? So have a nice weekend. I'll see you on Monday.